Good evening, viewers, and welcome. My name is Breakfast J, and this is my very first episode of Crypto TA. So, because it's the first episode, let's go ahead and get these welcomes and formalities out of the way quickly. Firstly, I just wanted to talk about some of the assets I'm going to be looking at, some of the crypto I'm going to be looking at. Over here to the right of my trading view, we have some different tabs to look at. We have 3 tiers. Now, note that these tiers are subject to change, alright? So don't be mad if you don't see your favorite S coin where you think it should be or where it deserves to be. All these coins could be promoted, demoted, except for the Big Daddy, which is what we're looking at here, and that's Bitcoin. And so let's go ahead and take a look at some of these tiers. We've got the majors over here in my watch list. We have Bitcoin, Ethereum, Litecoin, Bitcoin Cash, XRP, Brave Liquid Index. We have Total 2, which is the entire crypto market cap excluding Bitcoin. We have Bitcoin Dominance. So some of the big players here. Now, before you complain about EOS being not on this list, you'll find it over here in the S coin tier, just because I think it's an S coin. We have some of the players such as Cardano, looks pretty ugly. We have, let's see here, we have Matic. Let's take a look at Matic just to give you an idea of what crypto could look like sometimes, you know. If you don't use your stop loss, you could ride this all the way up and you can get destroyed going down, all right? So just be careful. And then finally in this last tier, the tier that shall not be named, we've got all the other coins, and these coins do nothing but go down, all right? So if you see your favorite coin over here, I might move Tezos out. I think I'm going to move Tezos out of here, but for the most part, trash coins that do nothing but go down. You see your coin here, it's probably because I think it sucks, and you should just be shorting these coins if you even have the chance to. But like I said, they have the chance to move around, be promoted to the S coin tier. But that is yet to be seen. So let's go back to Bitcoin. And speaking of Bitcoin, it is time to begin the technical analysis. So I pulled up the little blank chart here because this is where I'm going to go in and just give you an idea of what my trading style looks like. I am a trader first and foremost. Yes, I believe that Bitcoin is going to be taken off to the moon for the long term, but I'm definitely focused on trading. And this is not just with crypto, this is with all the assets in the stock market. I'll be looking at some of those too, per request. I can't look at everything at one moment, so I'll be dabbling in some coins and in some stocks, and if there's some requests, I'll look at those, but for the most part, I'll just be deciding what to look at. All right, let's get into the style. So this content, just want to say, is recommended for people who are intermediate to advanced traders. Beginners, there's a place for you here. I would ask that you continue watching just for now. But if these subjects start to become too advanced and too confusing, then maybe you gotta read a little bit more or watch some other beginner videos or something. I definitely recommend reading about this stuff because some of the language I might be using can become a little confusing. So I just don't have time, sadly, to go through. If I'm going to be doing the beginner stuff, I'll be here all day. So I might make some series for beginner traders in the future, but for now, that's yet to be seen. Anyways, so this is some of the most basic things. Just here, the vanilla naked chart. We have candles, we have wicks, and we have price action. Now, some people don't even use all the other crazy indicators and end up being very profitable. I'd say you need some basic indicators like volume, but you could be very profitable. We're going to be talking about wicks, so here's a wick right here. You could kind of see the dojis, all types of wicks. We have rejection wicks, gravestone dojis, all these types of wicks and candles, bullish candles, bullish engulfing candles, bearish, etc. We're going to be talking about that. That's some of the most basic stuff. The time frames I look at, So we have the macro, which is the monthly here. It's the best macro tool to kind of gauge what we're going to be doing in the long term. Don't mind the ads, sorry. Personally, since crypto moves really quickly, it's not like the stock market. So I like the weekly a lot. I think the weekly gives a really good picture of the macro. Because look, you have a whole 2-year snapshot right here, just using the weekly. I think it's a really good tool. It's my personal favorite time frame to really judge trends. And I'll probably be making videos before the Sunday night close, so we can get a weekly analysis going in here. We could just figure out what might be coming for the next week. But also the daily candle, we can't sleep on the daily candles. It gives us a better picture. So if we want to be focusing on this year, we could really see the trend that's been forming here in the daily. We're going to go into that in a second. But I just want to talk about the time frames. And then the 4-hour I use a lot to get a very clearer picture in, for a month or 2-month kind of idea of what's going on. We'll use the 4-hour. The 1 hour, I rarely use it. I use it here and there. You can see I draw little patterns just to try to figure out what's going on. Look at this wick here. Just wanted to point this out. This happened this week. We had a scam wick up here. Some liquidation hunting going on here. The bots taking profit. I don't even know what happened here. We just had something. Maybe a whale just ate up all these orders and just completely wrecked people. But we'll go into this type of stuff in a second. And then very rarely, I'll use the 15-minute. And this is for deciding what's going to happen today. I won't be using it to decide longer term trends because the 15-minute is just ridiculous. All right, let's get back to the weekly. So, and obviously there's things like support and resistance. When I pull up the other chart, you're going to see more clearly how I use support and resistance. Just a basic idea of support and resistance. How we test something and bounce off. Like you can see here, this is a good support region that we're at right now. And if we were to lose it, then that old support would become resistance, this typical intermediate stuff. And then we have volume here. I'll pull up the volume. I always use the volume, especially with understanding how a pattern is playing out and when another big move could be coming. And then we have Fibonacci. Oh wait, let's talk about MACD and RSI. So I'm not going to go into what these indicators tell you, because I hopefully assume that you already know what these indicators kind of tell you. But I will be using the RSI and the MACD to determine overbought conditions and bullish divergence and convergence and bearish divergence and convergence. Let's see, what else? We got Fibonacci. Oh yes, the beautiful Fibonacci. I love this. Hold on. I love to use Fibonacci. Let's pull it out here. It's on this side. I'm so used to using it on mobile. Here we go. So first off, there's the Fibonacci retracement. I don't want to go too deep in how to use it. I think you should already know how to use it. But I'm going to be loving to use these Fibonacci retracements. But also, I use Fibonacci numbers. And here's where I might differ from most people's strategies. I found a lot of success in reading the markets with Fibonacci exponential moving averages. So here we have EMA 1, 2, 3, and 4. Which are Fibonacci numbers 21, 55, and 89. And then I just used the 200, which is not a Fibonacci number, but 200 is such an effective EMA. But really these three, 21, 55, and 89, are huge Fibonacci numbers. You could read the theory of the Fibonacci numbers, but I use them for my EMAs. Yellow is 21, green is 55, blue is 89, and then this red one here is the 200. The lighter red one is the 200. The darker one is the simple moving average. And yes, I'll talk about that real quick. I also use simple moving averages, so we could get things like Death Cross and Golden Cross and all that. My favorite simple moving averages are the 10, which is so effective. The 21 and the 10 are beautiful, along with the 200. 50, which we use to, of course it's support and resistance, as you can see already kind of on this chart, but it's mainly to find death crosses and golden crosses. and then the 100 simple moving average and the 200 simple moving average, which I use all of these. This is really key in my strategy, is the Fibonacci retracements and the Fibonacci number exponential moving averages. So all these things in conjunction will be what I use to read price action and figure out some trades. I like to trade margin, so I'm going to be talking about shorting. And I think a lot of people who are trading are also using margin. You could see that the derivative markets are really blowing up in the crypto space this year, especially this year and last year as well, which is another topic we'll talk about in the future. But now that I'm done with all this mumbo jumbo, let's go back. You're going to get a little bit of a complicated chart here, so don't get scared right away if you're not used to this type of thing, but here we are. It's not too bad. Some people might be like, whoa, what am I looking at? But we'll go into it. Let's talk about the Bitcoin macro. So I guess we could look at the monthly to start it off. We could figure out what's going to be happening with the end of 2019 and going into 2020. So Bitcoin, ooh, this is a little too big here. I'm going to be lowering these. So what am I seeing here in the charts? Let's go through a little bit of what's been happening. So we had an amazing bull run here on the monthly throughout late 2015, early 2016, all the way into the blow off 20K top at the very end of 2017. And then we had a correction, or a bear market is a better term for it. A bear market. We were losing, lower highs, lower high, lower high, but we had a support here, which I have a yellow line here. These yellow lines are going to be historical supports and resistances. They're really huge, as you'll see a little bit later. They've been pretty critical. But we had this support here, which was kind of confluent with the monthly 21 exponential moving average back in the end of 2018. And as soon as we lost it, we capitulated. And the reason I'm talking about this right now is it'll make sense in a little bit. You could already kind of see, look, we're kind of in the same area now here at the end of 2019. Am I saying we're going to capitulate? I'm not saying that just yet. But we'll talk about that in a second. And then we seem to have bounced, or at least kind of get a little bit supported here by the 50 exponential before going to this nice move here of 2019 all the way back to 14K. And now we've been ever since correcting and on the verge of a bear market, if you would probably already call it that. So let's go to the weekly. And like I said, I really like the weekly. It gives us a nice picture. We got supported by the 89 back here in the end of 2018, and then we dumped. But look, we got supported over here by the 200 simple moving average. That was a critical support, and then the 200 exponential also was kind of resistance over here. So we hovered in this area, this little early 2019 area for a while before we were finally able to break out. And once we broke out of this weekly 21, that's when I became bullish. This huge candle here back in April, I remember this day. I was at work during this time in the evening. And when I got back to my house, and I was just absolutely ecstatic just to see that we took off. It took a little while to really confirm it because, everyone was still a little skeptical if it was really a bull market, but really getting above this and closing above this on the weekly, this 21, was a huge move for Bitcoin, and it led us to the 14K top up here, which was awesome, and a lot of profits to be made. And if we take a look at the RSI and MACD, well, not much with the MACD here, but with the RSI, we blew up. We got into oversold territory, and then we double topped here. If you could see, we had a high, and then another high. It was a lower high and a double top. That was a bearish signal right here. So if you were playing these markets conservatively, there really was no excuse to be caught over here at 13K. After this rejection of 13K, this sharp rejection on the weekly, that was the signal. Let me zoom in a bit. This was the signal up here to sell and to start shorting. That's where people took their profit. I mean, a lot of people took profits all the way up here. because of a Fibonacci retracement. I'll show you right here. Let's pull it up. So if we take the ultimate high of 20K, hold on, before that let's take the ultimate high of 20K, and then we go down to the ultimate low down here at 3K. As you can see, that this 14K area was the 0.618 Fibonacci retracement, and that was just a take profit zone. You know, the market movers and traders and bots and algos, everybody just decided that this was a parabolic run. The RSI was just way too high, and people that took their profits in that, ever since then, we've been correcting here in this bear market, if you want to call it that. So I drew this channel here. This is kind of new because for a while we were in this. Let me go to the daily to get a better picture here. No, that's the 4 hour. I was wondering for a second. All right, let's get the daily. So we were kind of in this descending triangle. This yellow line here was resistance. There's old resistance from last year, these peak area over here. It became new support in this downsloping triangle that we had forming here. And for the whole summer I was watching this, just kind of taking looks at it. You know, it became clear at this rejection up here that this was a channel and downsloping triangle. And we were being supported for a while with the 89 over here. We lost it briefly over here, but we quickly recovered in a few days. And we just held this 89 for a while. And for the most part, nobody knew. You know, everyone knew that if we were to lose this 89, we would dump, which we did. But just pretend that we were back here in September. You just didn't know. As long as we were holding this, it was possible that we could and made another high. We had this little local high up here of 10.8K around, 10.9K. And when we rejected this area, it was becoming, scary for Bitcoin, because we knew that if we were not able to get above 11K, things were going to be bad for this descending triangle, which is inherently a bearish pattern. And what did we do? We dumped down here. We hovered in this area for a while, and I guess this is where the channel comes into play, because I remember on this day where we had this huge pump, there was some news with China, the Xi Jinping or whatever his name is. He said, "We like blockchain." So yeah, we just had a big China pump is what I like to call it. But really, maybe it was just a correction as well, because we were dumping for a while. We hit the bottom here, and you see these support lines that I drew. Well, this is also old time resistance again, just like up here in the lower 9K range. We had old resistance from 2018 acting as new support, and we skyrocketed. I didn't expect this big move. I don't think anybody expected this big move. And it's funny because at this exact moment when we had this big move, we had, if you could see right here, this green moving average was death crossing over the 50, was death crossing down on the 200, and that's a bearish signal. And when we dumped down here, I think everybody was bearish, and who knows what happened. Again, this is crypto, so it could have easily been some big time whales just saw value down here. They saw all the shorts coming in, and they just ate up all the shorts in conjunction with the China news. It just led to a pump, and we rejected this bearish death cross, which a lot of people, when we got up here to 10K, 9K area, became bullish again. Even myself, I wouldn't say I was bullish again, but I became a little bit optimistic that if we held above this 200 moving average over here, or exponential moving average. No, this is the moving average, yes. The 200 simple moving average, that if we held above it and pumped, we could be back in the bull territory, which would have been nice. But as you could see, hindsight, we lost it. And as soon as we lost it here, and well, if you could look really closely on the daily, zoom in a bit, we lost it, but we quickly recovered, but then we lost it again. And once this candle came in, this bearish candle, I went short, and this was one of my best plays of recent times. I went short under here on the 200 moving average, and I just rode this short down all the way here. I didn't ride it down to this wick. I ended up closing it around, I think, 7K range. But yeah, we went all the way to this wick here, and which was a nice move. But that brings us to the present. That brings us to the end of November, early December, towards the end of December, looking into 2020. What's going to be happening? I went through that macro and some history. Finally, what everyone's waiting for is what's going to happen next, right? So let's take a look. First of all, this is a weird pattern in my eyes. I can't really decide what it is. Looking at let me take a look at the RSI here on the daily. After this dump, so let me look at the volume only, actually, to make it clear. And I'll explain this purple box in a sec, why this is my dump target, which you'll see in a sec. If we just look at this dump here, this was the peak of the volume. As you can see, the volume spiked on this dump down here. And ever since, the volume's been teetering off, which suggests to me that this is some type of pattern in the works or forming. I don't even know. It could be almost completed. I drew this orange downsloping resistance here because, let's go to the 4 hour now, is a little appropriate for the 4 hour. Because we touched it 3 times, which 3 times is the general rule. If you get a touch 3 times, that is a trend. So this is a downsloping trend. Now, usually with these patterns, what you're supposed to have is like maybe a pennant or something, or possibly it could have been a downsloping triangle rather, of some sort, which it could still be kind of a downsloping triangle if we form that, but I'm hesitant to draw this line just yet because it's just hard to say what's going on. But for the most part, this is confirmed. This downsloping that we got here, I'll extend it a bit. So why am I bearish though? Because look, this pattern is not necessarily really very useful. But if we go to the weekly, let's take a look at the let's look at the monthly actually. Let's go ahead and look at the monthly. Whoa. So back to what I mentioned earlier, the 21 on the monthly, and I love to use the 21. And Fibonacci. So this is where these two things come through. So if we take the low, which is 3.3122, I tried to make it exact. 3.122, which if we look at the candle low is 3.122. So this is the exact low. And we go to our exact high, which was 13.880. And this is the Bitstamp chart, so some different exchanges will be a little different. But as you could see, we went to the 618. And when we looked at the 618 last time, we got rejected at 14K. So we're looking at the 618 again here. And it seems that for now, if you go back to this pattern that we were looking at, the bulls have been defending this area. We briefly went under it. But for the most part, this 7100 area, which is the 21 on the monthly, has been defended pretty strong a couple times here. Like on the shoulders of this inverse head and shoulders, we had here inverse head and shoulders, shoulder, head, shoulder, which led to a nice little rally up to this downsloping resistance. But on the shoulders, we have 7.1, 7.1, 7.1 again over here, 7.1. So the bulls for now are defending this area of the 618 retrace, which is 7.2, but also the 21 monthly, which is 7.1, this is a key area, because if we lose this area, there's nothing left. There's literally nothing left. Some people would argue that we're going down to the monthly 50, which is 5K. I don't think we'll get there without bouncing. We'll definitely bounce at least a few times before we get there, but that's a possibility. If we lose this area, there's nothing left. I drew these support lines here from the historical support because look, this is it. Like after we lose 7.3, the next support I drew down here, which is 5.846, right, which is also the top of my little box here, which I'm about to get into a little bit more detail. You could already kind of see it here on this weekly. We have areas of 3 confluence. So I'm not saying that this is going to happen, because in order for this to happen, we would first have to lose the 21. So if the bulls can hold this monthly 21 here, then we'll be fine. We could really rally here. If you look at the weekly again, if we look at the daily, you could picture this as a Adam and Eve double bottom here. It's even clearer on the 4 hour. We have Adam, which is this V shape down here, and then we have an Eve bottom. I mean, it's kind of changing a little bit, but you could still kind of call this an Eve bottom. This could be a potential reversal. So I'm not saying that we're going to dump. This could be the area that the bulls hold and defend. And we could go and rally back up to whatever. Let's go back to the weekly. We could rally all the way back up to the 21 on the weekly, which is 8.5K, and still nothing would change. We could literally pump right now to 8.5K. It would still be a lower high, and we would still be in a downtrend, and we would still be in this channel. You see this channel? The yellow 21 is still in the channel. So the bulls could pump us all the way here and still be in a bearish pattern. So yes, it's very possible that the bulls hold this area. But if they lose this area, if we close December under the 21 and the bulls are not able to defend that area, or the weekly even, if we look at the weekly here, this 89, we currently have lost the 89 EMA, which is at 72.50. If we lose this area, it could become very bearish really quick. Volume has been teetering off like I mentioned earlier, and at any moment this pattern could snap and we could dump either way. It's really 50-50. If we pump, then I'll be looking to long to the 8.2 area or to 8.5. We'll see when it gets up there. There's this resistance line up here, so it could dump at it could go up to 8.3. That's a very real possibility on the bull case. But on the bear case, if we lose this area, which personally, just based on this pattern, I think is a little bit more likely. So yeah, I said 50-50. Maybe I'm 60-40 on the bear side. But again, I could be wrong here. We could lose this 618 and we could dump down to this purple box here. Which why is this purple box here? Well, we have this old support, which is going to become support again. And we have, if you see, the 200 EMA. And now it took the 200 MA last time, which is down at 5K, just like the 50 on the monthly. So yeah, it's possible we go down here, but I don't think we'll go down there. I think the 786, which is at 5.4K, is more likely to pick it up. Also this 200 EMA. So I think we could really dump down here somewhere in the channel here, maybe next week. We could dump here, and look, it's right at the support area. I've seen on Twitter and crypto news and all that, people are looking at this 5.8, 5.4K area as a potential buy. I think there's going to be a lot of buy orders that come in here. Is it going to be enough to move the markets? Hard to say. It really comes up to the whales that own most of it. But if there's enough buy pressure, we could potentially get support at this area. So that's my view on it. Currently, as of now, for disclosure, I am short because of that small bias. But I'm ready to flip on an instant. Look, even right now, I see this new daily candle spawned a few hours ago, or an hour ago, really, or something like that. And it could go up to. I'm looking at it to see if it hits this white 10 simple on the daily, or even the 21 on the daily, or the top of this pattern here. It could pump right up here and reject to the top of this downsloping resistance, and that would be a nice short, I would say. Or the bulls just crush it and we go up to those targets I mentioned earlier around 8.3, which would be nice too. 8.3 I think would be a great short as well. So good short opportunities are the 7.5K and 8.3K. That's if we pump here, and it looks like this green candle is starting to form a little bit. So yeah, it's very possible that we could get a little relief rally here, because the bulls are really trying to defend this 7.1 area. But again, we could also just dump too. So it's really right now this is such a weird pattern. I just want to be ready for either. You have to be ready for either. You have to cover yourself with stop losses. You have to be ready to flip short or flip long on a dime notice. You have to be ready. You have to read these markets. It's hard to trade these markets when you're busy. Your life is very busy. You have to really put a lot of time into this. So yeah, that's the general analysis, and I know it's never going to be this long. Usually I went through the whole monthly. I went through my strategy, the macro. I generally won't be doing this. I'll generally just be focusing on what happened recently. But that's my view for it now. Let me know. Give me some feedback. Do you think we're dumping to 5.8, 5.4? Or do you think the bulls are going to hold the area? We're going to close this weekly above the 89, which if we close this weekly above the 89, EMA that is, at 7.2K, then we could relief rally up here. Do you think that's more likely? Let me know. I'm really torn right now on what's going to happen. This is really a big moment for the future of crypto for the rest of this year and even till next year. So I just wanted to thank everybody for tuning in to the first episode here. We're coming up at 30 minutes. Again, it won't be this long usually. If you stuck it out the whole way, thank you. Go ahead and leave some feedback, subscribe, do your thing. This was Breakfast J. Thanks for tuning in, and peace.